Hey everybody, have you ever seen one of the situations to where somebody's making a lot of money, they're going on these great vacations, they're buying cars, they're buying all kinds of items, yet when you talk to them about taxes, they say, hey, I didn't have any taxes due this year. Well, are they doing something illegal? Perhaps, but there may be a better explanation. My name is Dr. Brian Winrow. I'm a tax professor and tax attorney, and I'm going to talk to you today about net operating losses so you know how to handle those types of situations and what is actually going on when you have a net operating loss. This should help you if you are in practice and have a net operating loss, or if you are practicing and learning more for purposes of an in-class exam or one of the certification exams, whether it's a CPA exam or the enrolled agency exam. So what has basically happened in those types of situations is you have this person who's making their money, but when they're recording it for financial statement purposes, the net income that the person has, well, we're using what is known as GAAP, the generally accepted accounting principles. But when we look at it for tax purposes, we're following the Internal Revenue Code. And the code is different than GAAP, and our tax planning techniques treat things differently. So for tax purposes, we want to go ahead and accelerate our depreciations, such as GAAP, or take Section 179 to expense items. For financial statement purposes, generally we're trying to slow down those deductions. We have to use the straight line method. So because there's a timing difference, we may have a lot more deductible expenses where deductions may exceed what our taxable income is, which results in a loss. And when we have a loss, what we're going to do is we're going to carry those losses forward, although there are certain limitations that apply. So in the next sections, I'm going to walk you through an example. I'm going to give you a definition of a net operating loss. I'm going to walk you through the example of a basic net operating loss, and then we'll start talking about what happens when we have a net operating loss under previous rules, such as before 2017, the COVID rules, and then today's rules. So we'll go through those and make sure that you're able to handle these situations with confidence, whether it's on your own tax return, in your class exam, or on one of the certification exams. So let's go ahead and get started. So let's take a look at our first example. Before we work through the problem, we need to understand what a net operating loss is. So the definition of a net operating loss, it occurs when you have your business expenses that are greater than your taxable income. Okay, your business taxable income. So if we have here revenue from sales or services, that's the money that's going to be coming in. Well, look, we have $100,000 right here. Okay, so then if we come over here, we can say that's the only revenue they have that's coming in. So we're going to take that 100,000, and that's going to be our total amount of revenue. That's going to be our taxable income. Now what we're going to do is we're going to start looking at these different expenses. These are all of our business expenses that are going to be impacting our business. So here's a few examples of them that I listed. I didn't want to give you an exhaustive list, but we have rents, utilities, payroll, supplies. But you'd also expect to see things such as Section 179 or maker's depreciation. You'd expect some kind of depreciation costs on there as well. But let's go ahead and see how this applies. We have $100,000 of our revenue, total revenue. Now what we're looking at is our expenses of rent for $22,000, utilities for $8,000, payroll $60,000, and supplies $20,000. So if we add all of these together, what we have is $110,000 of expenses. All right, well, if we subtract those, the $100,000 of revenue minus our business expenses of $110,000, well, now we have a loss of $10,000. We call that loss a net operating loss. The way we handle a net operating loss is going to be a function of two factors. First one is going to be what year are we in. So we have a current rule that's going to say we're going to carry it forward indefinitely, and we can deduct 80% of taxable income in the previous years. However, there have been rules in the past, the not too distant past, to where we carried it back 5 years and you carry it forward, or maybe we carried it back 2 years and we had a 20-year limitation on how far we could carry them forward. So that's going to be the first thing. What year did this occur? And secondly, how much taxable income did we have in the preceding years? How much do we have next year in 2027, 28, 29 as we go down the line? Now, what I will do next is I'm going to show you what the different rules are so that way you know how far to carry them forward and how we actually handle this $10,000 loss, because that loss is going to help us offset taxable income in the future years. So let's go ahead and let's look at the different rules. All right, so let's take a look at what the different rules are. And you can see from this illustration that we have carryback, carry forward, and taxable income limits all the way to our left. Now, I have this set up by the different laws and what the requirements were under each law. So we had, prior to 2017, what we could do is we could carry back a net operating loss 2 years. So if this is, say, 2026 that you're viewing this video, we could go back to 2024, 2025, and then the current year would be 2026. So we would have applied our net operating losses against any net operating gains back in 2024 and then 2025 until we offset our net operating losses. If we still had some net operating losses that surpassed any net operating gains that we had in the previous 2 years, what we would have done is we would have carried those forward for 20 more years. So we've gone from 2024 to 2025, current year being 2026. Then we would have went to 2027, 2028, 2029, and all the way down until we hit the 20 years. That was our original rule. And then what we can see is the taxable income limit. You could offset your net operating losses up to 100% of your net operating income. So there wasn't any other requirement. You could offset it and bring your taxable income all the way down to zero. Now, the TCJA changed that in 2017. And it says, okay, no more carryback. We only carry forward. So forward only. The carry forward, we removed the 20 years limitation so you could continue to carry it forward as long as you needed. And then you were limited. You couldn't bring your net operating income all the way down, or your taxable income all the way down to zero. You could only apply your net operating loss to 80% of your net taxable income. I will work through some examples so you get to see how that actually applies. So we will get to that. But right now we're just looking at the different rules. So then COVID happened, and in 2020 they created something that's retroactive a couple years. But from 2018 to 2020, if you had a net operating loss, what you would do is you could carry back that net operating loss 5 years, and then you could carry it forward indefinitely as long as you needed. So it was unlimited in how many years you may have to carry it forward until you had some type of taxable income that you could offset it. And they also gave the favorable limitation of 100%, so they could knock down your entire taxable income down to zero. And then after the CARES Act, what we're at today in our rule today is there's no carryback, our carry forward is unlimited, and our taxable income limit is 80%. So where we are today is where we were in 2017 when the TCJA originally passed. So it changed in 2017 to the TCJA, and then when COVID hit, they made just a couple years of changes there, and then we went back to what that was before the TCJA. Now that whole 80% taxable limit, we need to take a look at that to make sure we have that down. So let's go ahead and look at what I mean when I say there's an 80% taxable income limit. So let's take a look at this NOL carry forward and see what this business is about. So in 2026, in that reddish cell, you can see that we have a loss of $100,000. That's our NOL carry forward. So in other words, we saw what our taxable income was, we saw what our deductions were, and our deductions exceeded, our business deductions exceeded our taxable income, so we came out with a net operating loss. Now, because this happened in the current laws, we don't get to go back, 2 years or 5 years. All we do is we move forward indefinitely. So they won't expire, but we'll continue to move it forward until we actually get to use them. So you can see that I put NOL carry forward. We're going to carry it forward to 2027 to 2028, and we're going to keep moving down the line until they're all used. So let's look at what happened in 2027 then. So in 2027, we can see that we had taxable income as signified in the blue cell of $120,000. Great year. All right, so we had $120,000. So what do? Well, we have a net operating loss from 2026. But we can't apply all $100,000 to it because under the current law, what we said is we are limited to 80% of taxable income. So what we need to do is we need to say, all right, our taxable income in 2027 is $120,000. And what we need to do is we need to multiply it by 0.80, 80%. So that comes out to $96,000. So if you look at right just below taxable income under the 120,000, you see the NOL limit. If you work your way across that, you're going to see the math for that. So what we can do out of that $100,000 of net operating loss carry forward that came in 2026, we can use $96,000 of it. So if we can use $96,000 and we had taxable income of $120,000, well, you can see in the second blue cell that comes out to $24,000. Our taxable income after the net operating loss is going to be $24,000. The $120,000 for the 2027 taxable income minus our $96,000 loss, which was limited to 80% for the net operating loss, that's going to go ahead and give us $24,000. So that gives us $96,000. So when we subtract that out, we get $24,000. Well, we had $100,000 of losses in 2026 that we wanted to carry forward. We used 96,000 of them in 2027. So if you look at the final cell, the red cell, it's 100,000 minus 96. That means we have 4,000 of net operating losses that we can continue to carry forward until 2028 or 2029 or 2030 until we get to use them all. So that's the method that we're using when we're going through and trying to do net operating losses. Now, this is a very advantageous law for businesses, especially corporations and small businesses that might have volatile earnings, especially if you're starting out, right? You're starting out and maybe some years you have a really good year and other years you have a really bad year. This lets us take some of those bad years and instead of just using them all right away, it lets us continue to use them. Or instead of being able to use it at all, it lets us continue to be able to use it. So NOL carryforwards are a great thing for businesses. One thing that I do want you to recognize is when you have an NOL, it doesn't mean you get an immediate deduction, right? We're going to bring our taxable income perhaps all the way down to zero, depending on the year, right? But that's it. And then we continue to carry them forward. So if you see a net operating loss for a corporation, don't say, I get a refund on it, because that's not what's happening. We carry the net operating losses forward. Just one last thing. Had this loss occurred in 2019, right, during those COVID years, where we would go back 5 years and then we would go forward indefinitely. Remember, if you look back at the other, if you go back about 5 minutes in the recording, you're going to see that it said 100% of taxable income. If that were the case, if this were a 2020 loss, then what we would have done is in 2027, we could have used all 100,000 to knock our taxable income down to 120,000 because there's not that 80% limit. And that was also the pre-2017 rules that we could have used 100%. But today we're at 80%. So that's why we had to reduce it down to 96,000. All right, y'all, I hope you found this helpful. If you did, please subscribe to my channel. I'm going to continue to post other information, all tax related, some things that are designed for college students, some that are designed for tax students, and some that are designed for the greater population.